This
Yes,
conference will now be recorded.
at the latest Tuesday, because no, Thursday, last day of class. So have them in my office the last day of class so we can look at those. So have them in my office the last day of class. So being recorded, and let's see if I can share my camera. And as I get back, I know everybody is going to put their cameras on for me today as we finish up. So in case I have any pleasant surprises, so uh, for people with their cameras on, of course. So it might be a good idea to have your cameras on with your faces showing. So let me see if I can share now. So for the project part two, what I need to do, uh, what I need to see from you are assumptions, fixed costs, and product CVP workshop. So I think you have this document. The first thing you're going to do is you're going to work on your assumptions. And a lot of your assumptions can be similar to what we had before. I do want you to use 10% for bad debts and 20% for selling expenses. And I want your initial cash balance to be 200 and the minimum cash required is 100,000. So, but this is yours, but you got to put in your quarterly sales percent. And then for your raw materials, very important, what the item is, the per unit requirement and unit cost. As I was reviewing uh, stage one and even this part one resubmission, I could not always see your per unit requirement and unit cost. And it's going to be very uh, important that this information is consistent throughout. So when you do the assumptions, put in your per unit requirement and unit cost and use this consistently throughout. So these are the assumptions that we've been working through. And so you're just putting these in. How much equipment you're going to buy, your interest and principal. So this is your project. You're putting this information in. Let's move next to the fixed costs. The first fixed cost you're going to have are capital expenditures. And let's assume that your total capital expenditures are 200,000 for manufacturing overhead and 100,000 for administrative. So that gives you a total two-year cost, a total capital expenditure 300,000. And with the capital expenditure, this is sort of a one-time thing. It's like when you buy a car, you buy the car, you don't keep buying it each month. You make payments. Now you got to calculate the depreciation on what you bought. And so I've asked you to go with a 5-year life. So if you divide 5 into 200,000, you would get 20,000. And if you divide 5 into 10,000, assuming that, is that right? Let's see, get 10%. So you get 10,000. So this is the depreciation that I would be expecting to see if your costs were 200 and 500,000. Is that right? No, that's 10-year line, straight line. So this should be 40,000, correct?
Mr.
And this
Ward,
should,
can you zoom in?
Yeah,
okay,
40,000 and then 20,000 for the administrative.
okay. So uh, what you are able to do is to adjust your screen sometime, and I will try to zoom in, see if it'll get any bigger. without messing up. No. It is not wanting to get bigger today. And I hate to lose control of my whole screen. Let me just see. View. For some reason, it's not letting me zoom in. Can everybody kind of see this now? Can most
Sir.
people see this? Okay.
Yes.
But
Yes.
for some reason, it's not letting me expand. When I try to do it, it goes off. So just see if you can follow. And we'll go back over it and I'll send this to you. But the key thing is we're saying that your depreciation on manufacturing overhead is 40 and your depreciation on administrative expenses 20. When you make these calculations, that's the number that comes to the MOA schedule. So you don't just throw a number in here from somewhere. Some people had numbers and they didn't have any capital expenditures, so you won't be able to have depreciation if you didn't buy the equipment. So you're going to buy that equipment as we did in that demonstration problem. You're going to calculate the depreciation and you're going to calculate this depreciation here. And this is going to be, your depreciation expense. So that's not a guesstimated number. It comes from the capital expenditure schedule. Then your total notes payable is 300,000. So you be debiting equipment for 300, crediting notes payable for 300. I want you to charge a 10% interest rate. So the interest expense in this case would be 30,000. So whatever your project is, you're taking 10% of this cost and coming up with the interest expense. And that's going to be the interest expense that's going to be in your total fixed cost. So you've got to calculate that. So is that clear? Do all the team leaders see that? Ashley A, do you see this?
Yes, sir.
Mike, Kayvon, you see this?
Yes, sir. I see it.
That's James. Okay. So just keep that in mind in terms of, we coming up with these, the interest expense, a similar way to what we had in that demonstration problem, but I'm showing you how the fixed schedule has to work. Then you put in your other expenses. Let's just say you have a production salary of 100,000 and uh, let's put some supplies in here of 10,000. And so you understand fringes have to be paid on your salaries. You take 25%. That's an extra cost that you would have. And so if these were your overhead costs, then we'd auto sum those. And if we auto sum them, you got 175,000. And so 175,000 becomes the manufacturing overhead. Then we're going to go in here for administrative expenses, and let's just assume we had a president who was making 80,000. 80,000. And a CFO who was making, let's just say the CFO is making 70,000. And let's assume that, we had, say, 5,000 in office supplies. Okay, we got to put our fringes in. So 150,000 That's 37,500. Wrong place. And now we're going to total the administrative expenses, and they're 212,500. So given this set of facts, then your total fixed costs would be 417,500. So you see how we did this? We start off with the capital expenditures, and we get two things: our depreciation expense, and we get our interest expense. We go ahead and bring the interest expense down, 30,000. Then we put in the other MOH expenses, the other administrative expenses. We total all of those out. So based on this, 417,500 will be our total fixed costs. So that's how this schedule works. So as you work with it, you'll see, but that kind of pulls things together. So let me just see if I can copy these. And then we go to product CVP workshop. And let's just assume we're at break even. Okay. So you see how we did that? Any questions? No question. I'm trying to see if you all still there. Well,
I
I'm
have a
still
quick
communicating.
question.
Yes.
So the first, the number you put for MOH and administrative expense in the fixed cost sheet, where did that come from? Was that just like a guess?
Let's go back to the sheet.
Like how you
Yeah.
got your interest expense?
Let's go to interest expense again. You look at everything you bought, and you buy it on account, just like we did in this problem. You're gonna debit that equipment and credit notes payable. Your interest expense is 10%, 30,000. That is going to be your fixed cost for interest. You got it calculated. The 30,000
Right.
comes
I'm
now
saying how did you get the 200 and the 100?
for the MOH. We put in
Right.
the salary of the production manager, supplies, depreciation, fringe benefits. We added those up. That became 175,000. So we put 175,000 as a manufacturing overhead. Then we looked at our administrative expenses, salary of the president, CFO, supplies, fringes always 25% of the salaries. So you're aware of that, that's an extra cost. We add these up and we get 212,500. That number comes here. So I'm
Okay.
using 1, 2, and 3 to get the fixed cost in 4.
Right. I don't think you get my question. My question is how did you get the numbers in one?
You want just 1. I
Yeah.
estimated that I spent 200 and 100,000. You got to look
Okay.
at what you're making and determine what these numbers are. Like I
Okay.
had a 3D printer in here, but you're going to look at what you buy. You know, if you got a president or CEO, they need furniture, they need computers, and on and on. So you estimate all the costs that are needed, and you put them in. I just gave you some numbers here, but you're going to have to, with your business, if this was your business, how much would you be spending for manufacturing equipment, furniture, etc., and administrative equipment, furniture, and fixture? So you would cost that out based on the number of people you're going to have working. Got it?
Yeah, I got it. Thank you, sir.
Okay, so I put totals here just kind of to show you what you do with it once you got the totals. Anyone else? So, that's pretty straightforward and you come through, but that's what I want to see. I want to see the assumptions, then I want to see the fixed costs, then I want to see the production CVP worksheet. I want to see the production CVP worksheet. And so we're breaking even. And once again, I want to see that same per unit requirement and unit cost. So on the ink, what was the per unit requirement and the problem that you work on it? For the ink, for the problem you submitted to me, what was the per unit requirement?
You mean
From
the
this,
in-class one?
so what?
You mean the in-class problem?
Correct, the in-class problem right now.
5 cartridges. 5.
Needed 5 cartridges for the unit cost.
$10.
10.
Okay. So that's 50. So I want to see that here. I also want to see it on the assumption sheet. And then when you go to your schedules, I want to see 5 and 10. You got it? Now, the second raw material was what? The paper. And how many did we need?
7.
What was the unit cost?
$7.
7.
So that was what? 49. And then your labor was what?
1.
But what's the per unit requirement?
20.
Then the labor rate was what?
20.
And so that was 1 here. You see, when you go to those schedules, you got to have these numbers. And you got to be able to do that for your project. I got them kind of laid out now, but when you do your project, it's got to be the same thing. So what is my product variable cost?
$100.
$100. So what did my selling price multiple have to be in this problem?
5.
5. So the selling price is 500. Okay. This $100 is a very important number. I'm gonna put it at 24, and I'm gonna bold it. This $100 is a very important number. Why is it important? Let's go to the journal entries. Can everybody see the journal entry? Let's see if I can expand this in any. So this one is expanding for me. So the first journal entry everybody should have made, we debited cash and credited common stock for 200,000. Everybody got that right? Then we debit account receivable and credit the sales for 80,000. How many units did we sell? How many units did we sell?
1,600.
1,600 is a good number. What was the selling price?
500.
Okay, so that's $800,000. Bad debts was 10% of the debit bad debt expense. Then we collected 560, right? So we debited cash and credited accounts receivable. Okay. Any question on any of the first 4 journal entries? Okay. Now let's go to the 5th journal entry where we debiting cost of goods sold and crediting finished goods. what we got to do here is if we sold 1,600, we need the cost of goods sold for 1,600. Okay. I'm gonna put my times here. Now, what do I need to multiply it by? What do I need right here? What is that big number I bolded on those assumptions?
$100.
You need
Product
$100 here. You need the product variable cost. So what should this number be? How much should this number be?
160,000.
Okay. Let's see some T accounts. So does everyone get that now? When you calculate the product variable cost and you get that 100, then when you get ready to make this journal entry, you got to multiply it by 100. And look at the T account. When you put 400,000 in here, let's see, does everyone see the 400,000? Everybody see the finished goods account? Does everybody see the finished goods account?
Yes.
Yes, sir.
When we
Yes.
look when we look at this account, we got debits of 188, but credits of what? 400,000. So we're showing inventory with a credit balance. And that should never be the case. So so what number did we come up with? This number,
160,000.
how much? 160.
160,000.
So this should be 160,000. So our inventory then is going to be what?
28,000.
A positive number of 28,000. Any questions? So now we would have an inventory. How much did we just say? 28,000. Any questions? So this number then needs to be how much?
160,000. I thought there was a formula in that. I had a formula in there. Should have pulled it over.
Ah, look at that. Look at that. Look at that, Mike. Look at your trial balance. I'm doing too much y'all work for y'all. Now, if you got a balanced trial balance, there's be no excuse why you cannot have my balance sheet balance, right?
Yes, sir.
So, but this is well done because you can see if the corrections are you know. So it's just one little thing in terms of, like I said, it's kind of detail, and I said that, but it's a matter of picking it up. But once we pick that up and make that change, and we got a balanced trial balance of 2168, then our financial statement should run off of that. Now,
So,
I add these.
Dr. Boyd, I got a question for you. So
Okay.
with the so if you go down to the balance sheet,
Mm-hmm.
um, so if you put the $28,000 in, and then you don't put income summary in there, correct? Or you put income
Nope.
summary in there.
No, you
So
don't.
if you take once you put that 28,000 in, you get rid of the income summary, it'll bounce.
So what did you put income summary here for in the first place?
I had it on one of my other problems. I thought yeah.
Does it look like we're balanced now? Does everybody see this? So can everybody get theirs corrected now? Ashley A, Ashley V, Robert, you can get yours corrected. Kayvon,
Will you reopen it though?
the what?
Can you reopen it though?
Can I reopen it?
Yeah.
Well, if all your folks get their cameras on, I might be able to reopen it, but I got all these dark cameras, so
Damn.
maybe they put their cameras on for a reopening. I don't know. And I can't see those Londons. I don't know what they doing. They were talking the other email the other class period, but I don't see them. So so see if everybody can get their cameras on.
It looked like everybody camera on.
It does.
Yeah, it does.
What we'll do is if a team doesn't have their camera on, I won't extend them. So if everybody on that team got their camera on,
Yeah,
I will extend those teams.
I'm on the principal.
Team one is we have our cameras on, so
You have your
And team four here.
Team
let's
5 is
look
good.
at we're good, okay. Let's go back to the journal entries for a second. So this, like I say, this was the only journal entry that was sort of off. So, it was well done. But a journal entry, some of you all were forgetting, was the receipt of those short-term loans. So your cash was off because you did not make this journal entry, debiting cash and crediting short-term loans. Did everybody see that? So when you borrow that money, your cash is not going to be where it needs to be. So Mike and Team 3, did a good job. And some of the others, I just pulled that one out. to sort of demonstrate so that you all could get your corrections done. Can you get them done by the end of the night now? I don't want to interfere with y'all mental health day tomorrow, but if you want to work on it on your mental health day, that's fine too.
Yeah, tomorrow is a mental health day, huh?
Mm.
Yeah, Dr. Boyd, we'll take an extra 24 hours to do the.
Yeah, real slick, man.
Yeah, we can get that for Thursday.
But is everybody, all team leaders, are you seeing and can you now have this balance? Is there, so I've gone through where you might have had problems. One would have been not making the journal entry when the money was borrowed. Another one might be having the wrong amount for the inventory. So just scanning them before class. But those are the key ones. So Ashley V, can you get this done now? Ashley V, did you submit yours anyway?
Yes, I did. You should have it. I made the deadline.
Well, if I'm gonna start the class, all right. But can you now get it balanced and looking like that? That's what I need to know.
I
Professor
believe
Boyd?
so. I'm gonna review the video.
Ashley A,
Yes,
can
sir.
you now
Um,
balance that?
yeah,
Uh,
yeah. Can we go over the equipment, like the journal entry for the equipment and the long-term loan, real
okay,
quick?
we'll do that.
Thank you.
Kayvon, can we get it done?
Yes, sir.
That was kind of weak.
Just, what you want me to say? Just lay it, get it done.
Tell him how he's supposed to say it, Robert.
Hold
There, right
on.
there.
Yeah, we gonna get it done.
Okay. But I'm pleased, because at 11 o'clock this morning, I didn't have one of them as good as the worst one today. I did not have one, which is a larger class. But they're in the daytime, they're kind of young and everything. And so, uh,
We had to go back and watch the video to
okay.
catch on to a few things.
Okay. So, but I want you to get this done. See, I'll probably give you to midnight tomorrow. Now, what about my assumptions? Because you got to get this, and I'll probably move that to midnight tomorrow too. Because you got to have all of that finished so you can give me a 20-point uh, sales quiz for your project on Thursday. A 20-point sales quiz for your project on Thursday.
Mr. Boyd, are you gonna reopen it?
Is everybody on your team got their cameras on?
Wait, yeah, on my team here, but which one are you talking about? I'm talking about for the for our project part 2.
Yeah, I plan to reopen that. So I'll
Okay.
probably reopen both of those to be finished by the end of the day tomorrow.
Okay. And do we have to have a equipment?
Yeah, you got to have equipment. You had that big depreciation number down there. So how you gonna have a big depreciation number and no equipment? I saw that big number.
It's just bracelets.
So get some equipment and tie that in. But let's go back to that for Ashley. Okay, so your assumptions. Remember, I want to see these per unit requirements on your variable costs, because that's going to be important for you in balancing out. And then you see now the value of this product variable cost. That's going to be in that journal entry. And of course, you got to have those journal entries, those first 5 journal entries for me also on Thursday. So make sure you understand this and you can do it. Now, and of course, the assumptions, you can use virtually what we use, what we use in the other one. That's fine. But the purpose of the depreciation is that you're demonstrating to the banker that you're only borrowing for the cash amount. And so you just need to be aware of that. Now, let's go to fixed cost again, capital expenditures. And let's see if it's getting larger now. Okay. Capital expenditure budget. We might have a 3D print in here for $10,000. We might have equipment A. That might, that might be 90,000. Then we might have equipment 2. That might be 100,000. So we add up all the equipments. So you got to list them, maybe longer, depending on your business to make the item. Then you add them all up to get your total equipment. On the administrative side, you have, let's just say, furniture. We don't want the president sitting on the floor. 80,000. Let's just say we have computers. For 20,000. So some people gonna have their officers sitting on the floor with no computers or nothing. Uh, most people gonna have, you know. Okay, so now we have our costs based on these items that were purchased, and they add up to 300,000. We're going to calculate straight line depreciation 5 years, so everybody would use that convention. And so the items are going to depreciate at the rate of 40,000 a year for manufacturing overhead, 20,000 a year for administrative expense. So you bring those items down, 40,000 for the MOH and 20,000 for administrative expense, and then you put in the other expenses. Okay. Then the notes payable is 300,000. We're gonna have a 10% interest rate, so your interest expense is $30,000 in this problem. And so you make an entry, debting equipment for 300, crediting notes payable for 300. Then we want to pay the note off over a 5-year period. So if I'm gonna pay this note off over a 5-year period, how much is notes payable going to be each year?
$40,000.
How much is the annual note payable going to be over a 5-year period?
60,000. This is the
60,000.
total
Okay.
of the
Yeah, 60,000.
administration and manufacturing. Yeah.
So your interest expense will be 30 and your note payable will be 60. And you know it's going to be quarterly. So what? Each quarter it's going to have 7,500 here and 15,000 here. That's being paid. So that would be on your assumptions. Ashley A, do we see it now?
Yes, sir.
But work on, I'll look at it and everything. But when you run a business, you're expected to have a capital expenditure schedule like this, showing, because you got to show that, you can't just drop depreciation down here. You've got to show what you bought, and then here's the depreciation on it. Because what we're trying to do is to have financial statements, a cash budget, and a financial statement, and we want it all tying in the cash budget and the balance sheet and income statement to present. If you don't have it tied in and correct, then the bank can't loan you the money. They can't give you the line of credit. Okay. There are lending procedures, practices, FDIC. You can't loan money on uh, fraudulent bank statements, financial statements, unless they belong to Donald Trump. Then it's okay. Just kind of talking there, but in general, they got restrictions, and they've got to see accurate financial statements to give you that line of credit. So fixed costs, we start with capital expenditure. We're gonna get our interest expense, but we also, the note payable is gonna be just use 5 years to pay off your principal. 5. Paying it off over 5 years. So that's what that would mean. So you're going to do the same things for your schedule. So you'll be showing interest expense 30,000 a year, notes payable 60,000 a year, based on a 10% interest rate and a 5-year payoff period. Any questions?
So, Dr. Boyd, how would we reduce our taxable income then? Speaking of taxes, and we just went through tax season, right? To reduce our taxable income that we report, is there any way to do that with the?
Okay. Okay. One thing, if you got income, you're running a company. The only thing you can do is, rather than have straight line appreciation, use debit declining balance. This is what they use in the real estate industry. And so if you're replacing the equipment and everything over a period of time, then that's how you do it. You ever notice that service stations, they change ownership, and hotels change ownership? They don't keep the same name. They do this accelerated depreciation. Then the hotels and service stations sell between each other. So they don't lose any money, but they get a higher base for depreciation again. Then they use accelerated depreciation. That is principally uh, the only way. There's some other ways, but that's the biggest way to get your write-offs through depreciation. Got it? So once you depreciate something down, what they're doing in certain industries, they just sell it to each other at a higher price. So if I sell you a hotel for 1 million, you sell one back to me for 999,000. The costs go up, but I'm not out of any money. Then I start depreciating again. So that's what they do in the real estate industry. Sometimes you can have partnerships uh, that lose money, but you got to make sure that's going to be economically sound. So it's kind of like you personally, if you're making income, you got to pay taxes on it. If you're going to spend money for a write-off to cut your taxes, unless that what you spend is going to go up in value, you might as well pay the taxes. So sometimes people say, well, invest in this, buy this, and you get a write-off. Well, that write-off's no good unless you can get your money back. So most times companies just sell fixed assets between each other, then they start the depreciation back again. So they depreciate it down, then they're able to get a new base and start depreciating again. But because Hilton sold the Hyatt, they really don't owe each other. They just pay each other, swap checks. But the base for depreciation goes back up. So we'll just have to talk about that at some point. But in general, the rates for high income people are lower, and then they got the capital gains, and there's certain things that that they have. It's only so much they pay in Social Security taxes. So it's already built in that if the higher your income, the less taxes you pay. It's already built in. Then they have minimum taxes. So if you have too many of these items, you still got to pay a minimum amount of tax. So that sounds kind of difficult, but the way it works is really this. Somebody's got to pay taxes. Okay. We got a government, we got a military, we got our highway system, and on and on and on. So there's it's some waste in there. But then on the other hand, there's some valuable things that we have to pay for to run this country. Somebody's got to pay it. And so we don't want the poor to be paying it. Okay. They're already just trying to make it. The wealthy, the people over $1 million, they got a whole lot of stuff built in, so they don't pay as much. And so the people in the middle, people between 50,000 and 500,000, they pay for everything. Somebody's got to pay. Okay, you can't run the government without that. So I don't like paying my taxes. I only get about for my salary now. My take-home pay is only 60%. So when I pay Social Security and retirement, federal income tax, I only get 60% of my money. So it's do I like it? But it is 60%. Okay. So that's where we are when we're in this, I guess, 75,000, 100,000, 500,000. We're going to, in this bracket, pay most of the taxes to run the government. The rich not going to do it because they got their breaks. The poor can't do it. A lot of time we got negative income taxes so that they can survive. So, uh, unfortunately, that's just the way life is. So, If you don't want to pay taxes, you need to be above $1 million or $2 million. Then you can do all kinds of things. Make various types of investments. Have entities located in foreign countries and things like that. Things you can do. So that's probably not the answer you wanted, but that is the answer. And like I say, in a lot of countries, they live on something like $1,000, $3,000 or $4,000 a year. In a lot of countries, that's all they making, $5,000 a year. And so you have to realize, yeah, it would be great and to have more and more and more, but we're doing quite well here in the U.S.
And hopefully our product here sell a bunch of these things and make $1 million. Get us up in that bracket. Mm.
Yep, that's what you got to do. Be an entertainer or athlete. But even a lot of those folks run out of money. So you got to be careful. So if you get a lot of money, then gamble with just 10% of it. Go to Las Vegas, investing something wild or whatever, but only with 10%. 90% of your money you keep. Okay, that's what you need to do. Because when you get in risky things, a lot of time they don't work out. And that's why, we were looking, when we were looking at the stuff at the beginning of the year, that's why so a lot of people have made a lot of money, but a lot more people lose money. So when we get into Bitcoins and things like that, a few people make money, a lot of people lose money because it's a chain type deal. Okay. Anything else? I can let you all get to work and get this to me by tomorrow. So both things, your project part 2 and your this problem worked out. So you want it worked out, everything balanced so that you can then do your project looking like this. And if you got your formulas in, it should not take that long, right, Mike? Does not take that long.
Hey, Dr. Boyd, with that makeup, since you don't have the grades for the test, that will we have, or will the folks that are taking the makeup exam, will we have extra time for that as well?
Say that again.
So that CVP quiz retest, that's due
Okay.
tomorrow, right? But
Yeah.
the grades haven't been posted, so folks won't know if they need to retake it, right?
I think the grades were put in Blackboard. Chris graded those, and if you look in Blackboard, you got a grade for it. So he
Minus
Got it.
quickly
the
said,
people who had to like email it to you. Sorry.
I don't know if he got to you all yet,
Okay.
but it's like this. 2 things. It's a bonus 10 points. Do it anyway. Okay, it's a bonus 10 points now. Do it anyway. And if you're taking, the final and things like that, working on these projects, you need all the practice you can, because if you don't have that number correct, then your whole project, you can see, will be incorrect. If your quantity is incorrect, then your whole project will be incorrect.
So we just do like the quiz we're assigned to initially.
No, you do all of them actually, eh?
Oh, okay.
But some people need to do all of them. They need the extra points for other things and everything. So rather than it just being makeup for that, uh, a whole lot of people need points. So go ahead and do them for both those reasons. So it will be extra
Doc,
points for anyone who does it.
Mr. Boyd, so the grade that's the retest that we're doing is for the CBT attendance quiz or the individual CBP homework?
I think it's the CBP quiz, but if you got 10 more points, it covers anything that you were short on.
Right. Nah, cause I had to email mine in, so you said you said that he probably haven't got to those yet. So
No, I sent those to him. He has them, but I had an exit exam to take. It didn't go through, so he was back taking the exit exam again. So you can imagine he wasn't in a good mood to retake the exit exam. But he'll get to him. But not to worry about that. What you all need to really worry about is getting this project to me correct. So that those little bit of points will take care of themselves.
Dr.
I had one more question, boy, before we went or whatever. I had turned in that research paper from a long time ago, and I still don't have no grade for it.
What research have you turned in?
The one that we was assigned a minute ago.
Related to what?
I don't remember. It was a minute ago though, but it just say nothing on the grade, and I did.
Well, why didn't you tell me a long time ago?
I did. I emailed you.
I'll look for it. So email me
Okay.
again. So I'll go through all of those as I work on you all's grades tomorrow. So that's my
Yeah.
goal. This big class. And so you all are next. So plan to try to have all 3 periods done, all the way through CBP done. So I'm gonna work on that tomorrow and try to get that done. If not,
Dr.
then
Boyd,
at least I'm going. Did I what?
did you add, there was another retest that we had a few weeks back. Did you add the 10 points that we made from doing those?
If you made 10 points,
Well, I'm saying, or
but
did you add the extra credit for the people that took it but who didn't need to take it, I guess?
yes, you should have the 8-week grades, and in the 8-week grades, it should be there. So in the 8-week grades,
Okay.
if I got to those, I put those in. If not, that'll be in there also. But I thought I sent the 8-week grades out with those numbers in there. Because I couldn't have finished the 8-week grades if I hadn't done that. So look on the 8-week grades and see if they're there.